What's going on, traders? It's Ricky with Techbud Solutions. I want to thank you guys again for joining us for another recap within our channel. I'm going to make this pretty quick for you guys so you guys can get back to what it is that you're doing. Pretty much, I'm going to be recapping on today's trading, so I'm going to start sharing my screen right now and talk to you guys about the whole thought process on why I decided to jump in on these gold-based ETFs. And then there's two other stocks that I want to talk about that I decided to trade today. One I traded a little bit more than the others, and I'm going to talk about that. I'm also going to talk about a mistake that I made. Not necessarily a mistake, but if you guys saw and were active within the group chat, my position on JNUG when I wanted to sell for a profit, I should have done it right as the market opened, but instead, I ended up selling much later, which just meant that I dedicated so much more time and was just so much more involved in the same stock for the same kind of trade that I should have just in a sense locked in profits right away. And that's one of the things that I'm going to talk about. So I'm going to be sharing my screen. I hope you guys enjoy, and if you guys do, please feel free to let me know. But other than that, let's go ahead and get to it. So I'm going to be using the TD Ameritrade Thinkorswim platform. As you guys can tell, the stock that I'm talking about, it's an ETF, it's JNUG. And the reason that I found this one to be, if you guys didn't watch today's pre-market analysis or didn't watch us go live today, right as the market opened or even before, during my analysis yesterday, I talked about JNUG or JDST since they're gold-based ETFs. JNUG usually does well when our economy shows signs of uncertainty, since it's a gold-based ETF. And saying that, I said that actually yesterday during the aftermarket hour analysis that I made for you guys, and then in doing that, right as the market opened, ended up having a huge spike from lows of 1586 all the way to highs of 1733 at the peak of the day. Realistically, right as the market opened, I should have locked in profits, even just at 710 or this resistance at 711, right, that it had before. But instead, I ended up holding because of my stop loss. It was a mistake that I made. I thought I had my stop loss at 17. I actually had it at 16.9 and I forgot to raise it up. And because of that, I had to cancel that stop loss because I went back to try to put a limit order at 17, but it just continued to drop, and then it started to bounce at this 1660. And this is what I meant about following it through the entire day until eventually then locking in for a profit. And like always, and like a lot of you guys might feel, is I locked in my profit at $17. So right at the resistance, as what I thought. The second time that it came back up, it didn't actually hit $17. It hit like 16.98 or something, and then it came back down, bounced at the support at 1760. So it was actually doing pretty well. So I've been kind of talking a little bit more about it. Saw a lot of volume, right, because of the news that came out with President Trump, removing the United States to within the Paris Accord. And in doing that, it just shows kind of like uncertainty within our economy based on kind of just the feedback that was given based on, all the people and how they reacted, right? I don't know much about everything that was going on. All I knew is that, every time something like this happens, gold tends to do pretty well. Now, there's the inverse of JNUG, which is JDST, that didn't do very well today, and that's something that we talked about. When JNUG does well, JDST doesn't. So it's a quick kind of like 50-50 flip on if you're certain that our economy is going to do good, then JDST would, in a sense, be something that you would most likely want to look into because it goes up when our economy shows just promotions for growth. But JNUG does good when something bad happens with our economy and stuff like that. So it's just a very simple trend. I think that should be very easily understood. But right as the market opened again, had a huge little spike up, hit that same resistance that it did at 711. What I mean by that, or 1711, is during pre-market hours, this gray area that you see right here, it had a resistance at 1712. It had a little pullbacks, held above almost the entire pre-market time, held above $16.90. So that was a solid support. And in doing that, it bounced back up, hit the resistance at 1711. And something that I always talk about is pre-market hours pretty much projects pretty well how the market for the day is going to play out, as long as there's not a huge catalyst in volume or news. And in doing that, I should have just sold my position. I was up from 1640, and this was from the day before. But other than that, I should have sold my position. I didn't. I thought I had a stop loss at $17. It never filled. Continued to drop. I got scared that I was going to stop loss at 16. 90 because in a sense I got greedy and I wanted to sell at $17 just to lock in more profits, which I ended up dedicating so much more time to follow it through, and that was my mistake. Not locking in profits, not making sure that my stop loss was at the right point that I wanted it to, and not selling when I knew I should have sold at 17.11 or 17.10 even. But I ended up selling at $17, which later on ended up spiking right as I sold at $17. Ended up spiking up right all the way through 33, and then I had a couple pullbacks, showed a solid support at about, again, $17, but then broke that support and then started bouncing. Had another bounce at about $16.75, and then ended up closing well above $17 if I'm not mistaken. So $17 had a pretty solid support. So hopefully we can continue this upward trend and we can follow up with JNUG on Monday. The other one that I want to talk about is right as the market opened. This is FTR. I talked about this about for the past 2 days, and it's been a very common trend. And I just want to ask you guys what you guys think. We talked about it before. I identified the potential. It has a pretty solid support at 129 based on the past 2 days. 128 if you want to take into consideration, the past 3 days. But overall, it has solid bounces. It used to have a resistance at 134. Today's resistance was at that 134 mark, but the support was at 129. I did not buy in at 129. I bought in when it bounced back up at 130 because I don't care on getting in at the lowest price. All I care about is making sure that it's bouncing and showing signs of upward momentum. Again, the volume wasn't very good. It wasn't moving much, but trading this with my Fidelity account, I felt comfortable because I felt like I understood it pretty well. I got in at 130 and then ended up selling at 133. Again, but it was at least above the 2.33%. Again, this is not with my Robinhood account, but it was something that I understood. I knew my margin for loss. Just to talk to you guys about my plan, let's see if I actually have it here. So my purchase price 130, my target sell price 133, and my stop loss at 1.279. Why is it that I have my stop loss there? Well, the reason that I had my stop loss at 1.279 is because the support was at 128. So if it drops below the support, it means that it broke the support, meaning that it's going to continue to show a downward trend. And if we go back 20 days, it's going to simply show that there was a previous support at 119, and I do not want to write it all the way down. That's why I talk about cutting losses short, and then locking in locking in profits consistently. I'd much rather cut my losses right below the support, let it drop back down, wait for it to bounce, and then buy back in at like 121, 122 as it continues to rise, rather than hoping that it picks back up and selling for, what it is that I bought it for again. So it's having a plan and sticking to it is one of the biggest things. I'm going to talk about a message that I received, but give me one quick second. So again, and the reason that I sold at 133 was because that it was able to hit 134. I didn't want to get too greedy, especially not with this stock that wasn't showing much volume. And I ended up just wanting to, get rid of my actual shares. Ended up selling at 133, and I locked in, a very small amount of profit. Again, nothing big, but it was something that I've been talking about for the past couple of days. And a lot of you guys messaged me. Some said that, you guys don't see the potential with FTR, which I completely understand. And if you guys don't see potential, in no way should you ever trade anything that you don't feel comfortable trading. But those that did see potential, they set up a plan, they did their own trade. And it's this whole technique of identifying the support, identifying the resistance, and identifying the stop loss, creating the plan, writing it on that checklist or that prime berry pick, just to get it almost like on paper, being able to identify your percentage for risk. So buying in at 130 and having a stop loss at 1.279. My risk potential was at 1.62 when my potential for profit to sell at 1.33 was 2.26%. So again, the potential for profit was greater than the potential for loss, and it made sense to me. And that's one of the biggest things. Now, the last one that I want to be talking about is one of my biggest trades for today. And again, that was with my Fidelity account, and it was one that was introduced to me right as I was doing my live stream. And the reason that I find this whole thing to be so useful, and what I mean by thing is this whole networking group. I want to make sure that you guys understand that I've been getting some comments, and people always ask, well, you never talk about how it is that you find these certain stocks and how you grow your watch list, and you never talk about just what made you actually add those stocks to your watch list or how you came across them. I always tell you guys that I simply add the stocks that are being talked about within our group chat and add them to my watch list. So it's exposure. It's just adding as many stocks as I can to my watch list, as long as they meet, really just two criterias. Usually that they're above 50 cents and that they at least show healthy amounts of volume. And doing that, that's all I really care about to adding it to my watch list. And then just because I add it to my watch list doesn't mean that I actually have to trade it. It really comes down to, making it simple. I perform a technical analysis. I try to identify potential within the stocks within my watch list, and if I don't identify the potential and I don't see the potential yet, then I don't add it to my primary pick checklist, and I don't worry about it, right? It doesn't need to be that difficult. It really comes down to being exposed to certain stocks, adding that to my watch list, setting up, an analysis on each one, setting up a plan, and then, if it makes sense, then trade it, and if it doesn't, then don't go for it. And it comes down to a concept that simple. Now the last one that I'm going to be talking about again is a stock that for whoever was in our live stream that shouted it out, there's a couple of you that actually talked about it because of the huge gap that you guys saw that it dropped, and it was due to it releasing or dropping 40%, if I'm not mistaken, of its workforce. Also, it not continuing this certain drug that it was supposed to try to put out. The thing that I made a mistake on was the first thing is I didn't get in right away because I didn't really identify the potential, and what that made me miss out on is I believe like 20 or 40% profit. Not too sure. I'm going to show you guys my screen and see what it is that I'm talking about. So and the trade was with ECYT. My first trade with ECYT was not necessarily the best position that I could have made, but again, focusing on two things. So I want to make sure that you guys understand that this used to trade at $2.77. After this news report, it had a huge drop down to lows of 176. So again, what does that mean? That means that this is the support, and it had a resistance at about $2. So during pre-market hours, it set its support and its resistance. Right as the market opened, it broke that support, and this is the huge rise, the huge spike that I missed out on. And that potential for profit is about 15.79% if you got it from the bottom to top. Now, realistically, you could have. It's not really realistic to have known that it would have hit that resistance right away, but you could have followed with the trailing stop loss and stuff like that, right? It had huge pullbacks, and we were actually following it within our live stream, all the drops that it was actually having. It ended up coming right back. Where was it going to bounce at? Well, again, the support was at 176. So what does that mean? As it starts coming back down, then it makes sense that the support's going to be around this 176, 180, or 170 area, and that's ideally what it did. Again, a very simple concept, had a pretty nice drop, set its support at 180, and this is where I made the mistake. On my first entry, as it dropped, I didn't get in at the lowest price, and I didn't really want to worry too much about that. I ended up getting in on my first position at 185, and then I ended up selling at 190. And the reason that made sense to me was it had a previous support at 190. And once it broke that support, it set its new support at 181, and then it had a resistance at 190. Something that simple, right? Support at 181, resistance at 190, because the old support was at 190. So that made sense to me. The potential for profit from start to bottom, if you would have gone in, was about 5%. Again, I didn't care about getting in at the lowest price. I just wanted to get in as it was showing signs of upward momentum, meaning that it bounced. So I successfully identified the support at around 180, and it ended up bouncing at 181. And then the resistance is what I identified at 190. Did it go above 190? Well, yeah, it went up to 193. That's great. I locked in my profits at 190. That position wasn't huge from 185 to 190, right? I wasn't extremely satisfied with that trade. I knew it was most likely either going to continue to rise and I can get back in it as if it breaks this resistance, it becomes a new support, and then I can get in if it continues to show signs of upward momentum. But realistically, it dropped back down. It came back to the support at 180. But then this time what I did was I got in at 183, and it continued to drop. And that's where I made the mistake, because again, I broke one of my rules when it comes to not trying to get in at the lowest price rather than waiting for the bounce. And again, that's a very important, although it's a very simple, rule that you can break, and you might not see, the value in. I should have just taken a step back, been a little bit more patient, waited for the bounce, and have gone in at, 182, but at least have known that, it was going to continue to rise rather than it being on a consistent downward trend. Ended up hitting highs of 194. Again, sold at 190. Didn't care about how high it could go. all I wanted to do was I wanted to lock in my profits. I knew the resistance was at 190, and I knew the support that it bounced at was at 180. So when I bought in at 182, I ended up setting my stop loss at 1.79. Again, minimizing my risk and promoting potential for growth. Luckily, it continued to hold at 180 because I made the mistake of getting in again early before the bounce, rather than again getting in at this area rather than this downward trend. And then right as the market closed, I had a little pullback again at 186, but then I had a nice little rise again back up to this, broke this resistance at 191, and then ended up closing after market hours at 186. But overall, what I had to learn from my trades today was that, again, being patient, understanding that, you know, it's not about getting in at the lowest price, but making sure that I don't get in at a downward trend, but then I get in when I see it bounce. So identifying the support, waiting for the bounce, deciding to jump on in when I've identified the valid support, meaning that it's starting to show signs of upward momentum. Again, all I was able to see was this. So to me, it shows that, you know, it was bouncing. I could have decided to jump on in right here instead of this point. You know, this is where it's showing downward momentum. And although you guys might be saying, well, why does it matter? You got in at 182, you were going to get in at 182 anyways. It comes down to the principle of understanding that I got in when it was seeing a downward trend, and I put in my hard-earned money, and now I started investing into something that was continuously dropping in price rather than waiting for the bounce, identifying the support, and it's starting to show signs of upward momentum. Why would you throw your money into something that is seeing, you know, a depreciation in its value? I'd much rather invest into something that's increasing in value. Although it's a day trade, you want to treat it as something, you know, the whole concept of investing is to buy low and sell high, and being able to analyze that. I mean, I'd much rather get into something that shows signs of upward momentum rather than something that shows a downward trend. And that's just me. And although you guys might not, you know, care too much about that, I think really leading by example, and talking about the mistake that I made, making it clear that the importance of identifying the support, you know, making the plan of, okay, that's the support, I'm going to wait for the bounce, start getting in, you know, you can continue to average up as it continues to rise, and then sell at your resistance. Yes, it went up, you know, 4 cents, and for my, you know, based on my previous trade, I knew that the resistance previously was at 193 when I sold at 190. So I knew I could have squeezed in about 3% or 3 cents more. Am I going to risk it for those 3 cents in the long run? That's not going to matter. It's going to matter on how disciplined I am and where I'm buying in, where I'm selling, and where I'm cutting my losses. And the reason that I'm bringing this up is that in no way am I offended by this, right? And I want to make sure that's clear. He's a member within our group, and he said pretty much, but I don't want to necessarily say his name because I don't want him to think that in any way that I'm trying to like diss him or anything like that. But I love the feedback that you guys give me, and that's, you know, the position that I put myself in is. But he was saying that, you know, my videos are very repetitive, and they're getting a little bit longer. And I'm sorry, this thing is going a little bit longer, but I want to make sure that I explain myself in detail. And although it is repetitive, I feel like day trading is the same thing every day. Although it's exciting for, especially when you profit, it comes down to, you know, when you find certain techniques that work for you, when you set up certain plans, you know, that's what works for you. If you guys can think of more creative ways that I can, in a sense, express this, then please let me know. But I do this every day, and although I am kind of monotone, and although I am just kind of repetitive with what it is that I do, it's what works for me. It's what helps me lock in profits consistently. There's a trader within our group and within our group chat that calls me a sly fox because I don't necessarily, you know, care too much about what everyone is saying or you know, what everyone else is talking about, but I really like just analyzing a stock, waiting for the bounce, and, you know, then deciding to, in a sense, what he likes to interpret as attack and then sell for a profit. Is I like being very patient. I like to make sure that I wait for the bounce, although I broke that rule today, because it works for me, and it's a technique that has worked for me, and it's worked for a couple traders within the group, and I want to continue to talk about that because I want to make sure that the new members that continue to watch this, or the new viewers that continue to watch this, understand the importance of it. So I really want to hear your guys' mistakes and best practices that are being shared. And what I mean by that is I saw there was a couple mistakes that people were making. And there's a lot of great suggestions that you guys are reaching out to me with on how I can make this group better and stuff like that. And I want to welcome all that feedback 100%, even if it can be a little bit more constructive. If you guys have something that you guys think 100% I'm doing wrong, then let me know. I mean, I'm here to really learn myself, right? I use this group for exposure just like you guys, but it comes down to the investor to make sense of the trade and to be the final decision maker on what I invest my money in. One of the big suggestions I'm kind of working on too, Patrick is one of the members within our group, and he's one that came up with a great idea for another group within our Techbud Solutions team. So I'm going to be working with him on a certain subgroup that I think a lot of new members can actually benefit and just continue to grow and kind of grow at their own pace. But there's another member within our group that came up with a subgroup that's going to be specifically for beginners. And I'm sorry, let me go ahead and see if I can actually pull up his name. But overall, again, it's that very useful feedback that you guys see, what it is that I'm missing because I try to manage as many groups and as many just questions as I can. A simple thing that you guys can, like identify as something so simple and something that I'm not doing correct, or something that you guys think that I can, utilize to make this group better or more effective, not just for yourself, but for new traders or experienced traders, then let me know, because, me working with you isn't far-fetched. There's been a lot of traders, and almost all the other traders that have started subgroups within Techbud Solutions has been because they not only have an idea on how they can make this group better for everyone, but they create a plan and then they tell me about it, execute, right? So learn, plan, and trade. So they learn, right? They see what can be improved. They plan out how they can make it better. And if I make sense of it, or anyone else within the administration or moderators within Techbud Solutions can make sense of it, then why not implement that into our group to provide, a more welcoming platform for everyone that's a little bit more well-rounded for everyone. It's definitely something that we're working on, but I do apologize. I've just been extremely busy, and I'm extremely tired, as you guys can tell, because of just the workload that I've been having to go through. But I do want to thank you guys for everything that it is that you guys do for me. And if there's anything that I can do in a sense to assist you guys in your success, again, the link is provided for you down below, so you guys can join Techbud Solutions. So you simply have to have a Facebook group, and then on the top pinned post, there is the group chats that you can have access to. The swing trading group chat is currently unavailable because we have exceeded our cap. That is something that I'm working on, so I just want to make sure that's clear. But other than that, I don't know if you guys actually saw, but we're hitting or almost a resistance at 20,000 subscribers. So if you guys can help us out in any way, we'd love to have you guys subscribe to our channel if you guys can. If you guys can like this video as well, that just gives me a better indication that, you guys enjoyed this content. And if you don't, feel free to leave it in the comments and let me know what I can do better. I'm in no way ashamed or, want to hide any negative comments. I really use it because I'm trying to create this to be a very effective group, and I want to make it the most effective as I can. So if I see comments that are really designed to help me improve this group, although they can be a little bit more they criticize me, then although if you're really trying to help me out, then just comment below what you think I can do better, and I'd love to hear you guys out, and I would love to work with you guys if you guys have any good ideas on how we can continue to make this group better. So I hope you guys can see that. But overall, I hope you guys have an amazing weekend, and just be safe. Be ready for our Sunday stock talk. We'll post the link on our Facebook platform, and it's going to be at 6:30 Mountain Standard Time. So make sure you subscribe so you guys can stay tuned to that. But other than that, it was a very productive week, and we definitely ended it on a green note. It was by far one of the biggest days overall for my different trades. So I thank you guys again. So take care, guys, and like always, let's make sure that we end the week on a green note. Take care, guys.